Regarding the recession, Jason, yes, I have been forecasting the same recession, but I believe that a number of factors, including the fact that many investors are now suddenly concerned about it, could be the reason it occurs now. A significant change in mood has occurred. Another issue, in my opinion, is that we may not yet be aware of all the negative information, unknown unknowns. Indeed, none of us was keeping tabs on the carry trade in yen. I mean, it was something we might have heard of, but until this past week we weren't really considering it. And how many more things like that are there in the world? Additionally, I believe that this administration has a history of keeping things under wraps. But not to go political, they kept peaceility hidden for years. For those who are unaware, we are discussing the idea of black swans. It must have a dramatic effect and be something you are unaware of in order to have a black swan. This would not apply to the yen trade as it didn't have a significant impact, and people were well aware of it, even if it wasn't front-page news. However, black swans might be seated there. The subprime mortgage, which had a huge impact during the great financial crisis but was unknown, is undoubtedly the black swan that comes to mind when you think of recent events. It was well known and had a significant effect. A black swan must fit under each of those characteristics, and black swans might exist, correct? When you stated that the yen carry trade had no effect, you're referring to SX. The Bank of Japan retreated, which is why. We don't know what would have happened if they had continued. Isn't that right? Just so anyone following the Black Swan tracker are aware, it didn't. Let's discuss Apple. I'll give your flowers to you immediately, Shah. They are on their way to you. Look to your left. A huge bouquet has arrived because you foreseen that I wouldn't send you flowers. Here are your virtual flowers, he said, turning to his left. I believe you were entirely right when you said that Berkshire Hathaway and Buffett would become less interested in a trade the less they discussed it in their publications, letters, and events. As far as I'm aware, Berkshire Hathaway has sold half of Apple, their biggest stake. Some claim they are overweight, others say they don't trust the corporation, and still others claim that Freeberg wants to increase the amount of money on the books so they can make additional acquisitions. You might just complete your victory lap, Chamath, and then wheel. I believe Freeberg double-clicked on this and took a deep dive. I'm at a loss for words. It's been a pattern in their letters, I believe. He is selling when he ceases bringing up a company in his letter. It's fantastic. It's there. Yes, and this is what took place. All right then, walk us through this, Freeberg. It appears that they have liquidated 55% of their Apple holdings since the year began. Additionally, if you consider the year's end, Nick, here is what Berkshire's stock holdings were in their non-majority-owned companies, if you can get up the pie chart graphic. Thus, they do not fully own the company, and Apple accounted for half of their $174 billion portfolio. Just a few days ago, Apple's stock price undoubtedly reached its highest point ever, but it has since declined as it was revealed that Berkshire had sold 55% of this holding since the year began. There are others who contend that they have a perspective on the business, strategy, and competitive environment. With the valuation multiple trading at almost 30 times earnings, some have claimed that it has risen too high. Since Berkshire purchased the stock in 2016, it has increased 900%. Nicely done, 9-bagger. Yes. Additionally, as you can see below at the beginning of the year, some would contend that the portfolio's percentage is excessively high at over 50%. However, I will offer some of the counterarguments, when Warren Buffett evaluates the stocks he has chosen, he doesn't conduct a lot of research on business strategy. He frequently identifies and discusses excellent managers who produce high returns, and he continues to work with them. And he sometimes stays with them for decades at a time. This company's management has remained the same. Since he invested, the return profile for both invested and returned funds has only become better. He is pleased to be concentrated, and they are producing greater cash flow, paying out more dividends, and repurchasing more stock. He has wagered heavily on individual businesses over the years, to the point where he occasionally simply buys the entire business, as he did with Geico in 1996. He frequently discusses the need of identifying a business with excellent management, a high-end product with a healthy profit margin, and a strong brand value and long-lasting moat. According to my understanding of what's actually happening here, Apple differs from some of the other. State authorities approve and efficiently determine GEICO's rates. The reason Berkshire has a moat is that they have the biggest capital base and a cash-generating engine. Additionally, the government sets the rates in public. However, Apple is not subject to any regulations, and the regulatory bodies that keep an eye on the company make it abundantly evident that Apple faces serious and profound financial risks. Given that Google pays Apple $20 billion annually to be the default search engine, there is a genuine regulatory risk associated with the Google antitrust case. We will discuss the Google arrangement in a moment. Apple and China have a close relationship as well. They sell a lot of their products to China and do a lot of their manufacturing there. Therefore, Apple faces a serious risk when regulators begin to examine firm interactions with China more closely, as they have stated they will. Users are tracked by advertising, customers are subsequently charged membership fees. Above all, we have discussed extensively the 30% VIG that Apple imposes on its App Store, and how authorities are now intervening and investigating this. As a result, this business may be a monopoly in many meanings of the word because it is not yet regulated, and Apple may experience financial hardship during that transition. When they reach the opposite side, it begins to resemble a massive Berkshire-style company much more. That then is my type of synopsis of what's happening with Apple. I'm not sure if you guys, in other words, I'm not sure. It's quite deaf in my opinion. What do you think of Berkshire Hathaway's intentions in this enormous cash boost, Zach? What's on Warren Buffett's mind? Is this because he gained weight, or is he hoarding money because he wants to buy things cheaply or in order to avoid regulations during the impending recession? According to Free, during the global sell-off that occurred on Sunday and Monday, many people shared this graphic online and pointed out that Buffett was sitting on the largest cash pile he had ever been on. People aren't really discussing this because of the market recovery that followed, but it makes sense that Buffett is accumulating a war chest here and is in a relatively defensive posture. As you can see, he began making a lot of investments which caused the cash pile to decline. Was that in 2021 to 2022? Given the size of the cash pile, it would be reasonable to assume that he believes that the risk-reward ratio for public stocks is currently low and that he is, once more, slightly more risk-off. Sham, how do you feel about the regulatory risk argument that Freeberg is putting forth here? I'd agree with David and Freeberg that the China issue might have had an effect, but I also believe that he sold a significant amount of BYD, which they have owned since 2008. That's a Chinese EV company, you know. And so that might have been a contributing factor. I'm not sure, to be honest. Hold on. You're claiming that both of those are dependent on China. Perhaps he thought that the portfolio as a whole relied too much on China. Perhaps. I could purchase that, yes. That makes a fair amount of sense. But it's important to keep in mind that these choices have, in my opinion, been considered for at least a few quarters. You do realize that the letter he writes wasn't written yesterday, don't you? Month after month, that was being draughted. Therefore, these choices were made some time ago. If we're going to be conspiracy theorists, there's also the explanation that perhaps Charlie Munger is beginning to compile the book in preparation for the smooth transition to Greg Abel after Buffett's death. So hold on a minute, that might be another. When you say that, you're implying that he wants to transfer it with less risk, thus relying solely on one stock where China would be risky. In order to facilitate a smoother handoff, he wants to make it extremely tidy. Who wants to give away a well-structured book? Or perhaps he and Greg Abel, have already discussed the type of risk book they would like to have over the next 5 to 10 years, and it shows that they have discussed what the next CEO wants. It might. Therefore, there may be a variety of explanations. I'm not entirely sure. I just believe that Apple, to return to Freeberg's main argument, many of his general comments are ones that I agree with. Apple is a little bit off course, but I'm not sure if that had an impact on Berkshire's approach. It is a business that has a successful unchecked monopoly or duopoly and is unsure about what to do. And that, in my opinion, is the company's greatest issue, regardless of whether Buffett sells now, sells in a year, or doesn't sell in a year. Once you are regulated, all of that risk is eliminated, and you are aware of the costs, what you can do, and where you can go. That's what all of his other monopolies have in common.